Everybody's jumping in. 23,000, probably heading higher. Has Bitcoin gone past its status as perhaps a speculative store of value?
Yes, Linda, good to be back. No, absolutely. This past week was a historic week for not only Bitcoin, but crypto assets. But really what sets it apart probably from what all the ups and downs we have seen in the last couple of years is that this rally now, Linda, seems to be driven by institutional investors. As you know, over the last couple of months, we saw many of the large hedge funds and asset managers, from Paul Tudor Jones to the Guggenheims of this world. Even the last 48 hours, we had funds like Ruffer, we had funds like One River announced that they'd bought 750 and 600 million respectively in Bitcoin. So you're having a lot of these institutional players come in and really enter the space. And frankly, they're able to do this because of two main reasons. The first one is, unlike a couple of years ago, right now you have a lot of these traditional instruments that these funds can use to access the ecosystem. The Bitcoin futures on the CME are a great example. And second, unlike 2017 in the last rally, you have now a lot of regulated counterparties, from crypto exchanges, OTC desks, crypto funds, crypto custodians, and really this really changes the game. So we can really say that it's really becoming, institutional investors are coming in, and that pretty much changes the game when it comes to the whole crypto assets market.
I'm just wondering, the way it's trading, is it linked to any other asset classes, or is it perhaps trading in its own world? Any correlation with, whether it is, I don't know, gold, risk assets? What are you seeing?
Yeah, it's a good question, Linda. Often what you'll see is many people will relate to Bitcoin as being a digital version of gold. And actually if you look at the statements a lot of these buy-side asset managers have made, they often look at it as a kind of as a hedge against inflation, or as a reaction to the record levels of quantitative easing that we have seen around the world. And a great example of this is when you look at some of the more traditional companies that have bought Bitcoin for that particular reason. I mean, a great example this week is the 169-year-old insurance company MassMutual that announced that they had bought $100 million in Bitcoin, again for this particular reason as well. And you've seen now numerous companies buy Bitcoin as part of their treasury because they see it as a hedge against inflation. So I think many people are now seeing it as that's kind of the positioning they're taking when it comes to Bitcoin, particularly from a lot of the more traditional financial institution or corporates from that perspective.
Just wondering, how much more upside? Can we talk about fair value at all? We have the likes of Guggenheim saying, you know what, 400,000 bucks.
Yeah, I mean, it's been very interesting, actually. The last couple of weeks, you had many firms like Guggenheim that just came out with a $400,000 statement. Bloomberg, actually, your colleagues came out with $50,000 for next year. You had Citibank, some of the FX trader came out with 320,000 projections. Frankly, from my personal perspective, when I look at the price of Bitcoin, it's more noise. What I really like to focus on is how many institutional investors are coming in. For example, if you look literally the last couple of months, we had some of the large banks from DBS to Standard Chartered who made their plans public in the crypto space. And this is very important because for a lot of players, regulated players especially, who want to enter the space, they need to be able to trade with regulated counterparties who understand the importance of counterparty risk, regulatory compliance, and so on and so forth. So I think those metrics, those elements of the entry of institutional players and the number of them are, for me, probably more important factors than just the price of Bitcoin, which is often noise and is great for a public discussion, but really we have to look at some of the fundamental drivers with a lot of the entry of institutional investors that are driving this.
Henri, tell me something that, we've got miners, adopters, and speculators who seem to be the ones who are currently rewarded. I mean, wouldn't you prefer to see not just Bitcoin, but a cryptocurrency that rewards those people who use it as a means of payment rather than, I suppose, a speculative asset?
Well, Rishad, from that perspective, there's obviously one of the big developments that I'm watching for the year ahead is what we call the rise of stable coins, which are digital assets that are backed one-to-one by fiat currencies like the US dollar, for example. And when you talk about being useful to the everyday people, this is a great example as they can be used in cross-border payments. Today, the average cost of cross-border payment is 7%. This is the average globally, and there's over $500 billion that are sent every year by 250 million people. And this is a great use case where digital currencies, especially stable coins, can play a role. And here, all eyes are happy over the next couple of months will be on Libra, now called DM, where they're looking at tackling this problem and making cross-border payments as easy as sending a WhatsApp payment or email. So definitely an area to watch from that perspective.
Is Bitcoin more secure, less secure than national currencies, even if those national currencies digitize like the plans for the yuan?
Well, yeah, obviously, I mean, obviously the Bitcoin that was created more than a decade ago, and obviously the developments with Libra in June 2019 really catalyzed another big element of the ecosystem, which are central bank digital currencies, which are digital currencies that are issued by a central bank and that become part of the monetary base of a country. And I mean, just to give an idea, Rishad, today, according to the Bank for International Settlements, 80%, 80, of central banks around the world are experimenting around this topic. And obviously, over the last couple of months, we saw many countries from the UK to all the way to the Bahamas make their plans on this topic. But really here, all the eyes, the big elephant in the room is China. And China has taken a lot of the properties of Bitcoin and digital currencies and looked at them and how they can embed them inside a national currency. And China is years ahead right now of any other country. I mean, just to give you an example, they just finished the phase 1 of their pilot, and over 2 billion renminbi, that's $300 million, was actually tested in over 12,000 use cases. Even this last weekend in Suzhou, in the eastern part of China, 100,000 residents got 200 renminbi that they were of digital currency, central bank digital currency, that they were able to experiment. So this is definitely an area to watch in 2021, and an area where I expect to see a lot of developments, not only globally, but particularly in China.
So lots of optimism there, Henri. The question is really whether it can upend a dollar-backed financial system, and if not now, then when?
Yeah, there's obviously a big debate as whether, digital currencies can come and, impact the role of the US dollar as a reserve currency. I would argue, actually, in many regards, digital currencies even help the US dollar. I'll give you a very simple example. I was mentioning before stable coins, which are digital currencies backed one-to-one by fiat currencies. Today, the vast majority, over 90% of these stable coins, are backed by US dollars. So in a way, in many regards, digital currencies allow us actually to make the existing horse faster if you want. Obviously, we can go to the crypto ecosystem, which we're moving from the horse to the sports car. But at least from the current perspective, a lot of these benefits that we have with digital currencies allow us to do the traditional financial system activities more effectively and more efficiently. And that's a great benefit to stable coins from that perspective.